The latest jobs report signaling a recovery is underway, but the rebounding economy is still to be felt in Manhattan real estate. Reports out by the big three New York City brokers show condo prices falling 10% from a year ago to about $782,000. Condo sales plunged 24%, but co-op sales surged almost 30%. They tend to be older and priced a little bit lower. So what is the health of the housing market all across America is what we're asking. Joining us now from Florida is Sherry Olafson, attorney at Fowler, White and Boggs, and from California, we have Alejandro Lazo, real estate reporter at the Los Angeles Times. In New York, we have Dolly Lenz, vice chairman of Prudential Douglas Elliman. She's at CNBC headquarters right here in Englewood Cliffs. And in Washington, D.C., we have our own Diane Olick. Wow. Thanks to all of you for joining us. Dolly, let me start with you, because what you are seeing in the Manhattan real estate market is the opposite of what the survey said, right?
Is the opposite of, I'm sorry.
Yeah, you said that you're seeing that volume is definitely down, but prices at the high end are pretty firm. That's not what we saw in our survey, no?
No, that's correct. Prices in the high end are very firm. In fact, somebody like the Alex Rodriguez apartment, the one he'd rented, they're asking $55 million. They couldn't quite get it. They did get offers just below that, took it off the market or redoing it a bit or putting it back on the market at 55 or higher in a few months. So, no, it's holding quite firm in the high end.
Sherry Olafson, I know everybody's pessimistic about housing, and that's what the data show. But let me just ask a simple question. If the U.S. economy is growing better, if jobs are coming online, if the recovery looks stronger, why won't that eventually affect a more positive housing story?
It definitely will eventually, Larry. No question unemployment has a big part to do with this. But, particularly in Florida, the foreclosure numbers are higher than the rest of the country. Half the people in the state are underwater in their homes. Prices have been cut in half. And so those things will take a while to recover, even as employment goes up. There are other sort of hidden factors down in Florida that people aren't aware of, one of which is the fact that Florida is one of the highest states for bank takeovers. And every time a bank is taken over, typically there's a lag time for those foreclosures and those workouts to be picked up again by the new staff. And you've got the FDIC loss share agreements that really restrict the bank's abilities to deal with those assets, which is, in my practice, what I deal with, particularly with the commercial market. It makes it very difficult to move forward. We're sort of like a car with glue in the engine. We just can't get moving forward.
And Alex, there are artificial factors at work as well. I mean, in your area, for example, out in California, you're seeing a lot that's been driven by the homebuyer tax credit, right? How is that impacting your market, and what's the state of your market right now?
Oh, well, that's right. Particularly last year, the homebuyer tax credit was driving sales quite a bit, and we've seen a big drop-off since then. California had its own tax credit, as well as the federal tax credits that were available nationwide. But since then, we've seen a very big drop-off, and a fairly steady drop-off, and prices have weakened, and there's been a lot of investors, mostly kind of coming into the market, stepping in, a lot of cash buyers, and more than half the market remains, these so-called distressed sales, short sales, foreclosure sales, and so there's still quite a bit of weakness in the California market.
Diane Olick, in the Washington, D.C., Northern Virginia, Maryland Metroplex, what's it look? It was hot, as I recall your earlier reporting.
Well, Larry, Washington is the perfect market to show you how it's all about jobs, because when you look at D.C. specifically, just the District of Columbia, which has a higher than national average unemployment rate, prices are dropping. There are a lot of sales, but it's mostly distressed sales, and that's why prices are dropping. But when you look at that greater metro, the D.C., Maryland and Virginia suburbs, prices are up 3%. S&P Case-Shiller just told us that it's the one metro market in the nation that is showing price increases. Why? Unemployment in the greater metro area is 6%, well below the national average. That is what's driving sales and driving prices higher. It's
Dolly,
all about jobs.
In the tri-state area, what's strong and what's weak?
The very high-end market is strong because there isn't much inventory, so you don't have a lot of choices when you're going out to look for a property. So that market is very strong. The new condo sales, have pretty much dried up, and that has to do with financing. It has to do with the banks taking over buildings, has to do with all kinds of issues. So that's pretty much dried up. But it's just interesting. It's such a dichotomy. Wherever you see across the country where employment, I'm finding, is strong or good, like Washington, like New York, like Palo Alto, San Francisco, you're seeing housing hold up in general strong.
Yeah, and Sherry, let me go back to Florida with you. I mean, no income tax in Florida. You just said prices are down 50%. That's cool. Why isn't this a great time to scoop up all these cheap properties?
It's a wonderful time if you don't live in Florida. And Florida happens to be benefiting from that. Because a third of the sales, Larry, are income properties, investment properties, and vacation homes, and a third of those are occurring in the South. So Florida is benefiting hugely from that. Also, affordability, haven for retirement, the healthcare industry, and other growth opportunities, including tourism. So Florida will definitely recover. The problem, as Diana mentioned, is that these investment and vacation homes are selling for even more of a discount than homeowner-occupied homes. And the problem we're seeing is that discount's gone from 25% 2 years ago to 30% last year to almost 40% discount this year. So particularly in Florida, but also in California, New York, and Washington, in some of the areas, we're seeing a big dichotomy. We're seeing sales numbers that are okay, but prices that are ridiculous.
I know. I'm hearing opportunity all over the place.
Yeah, but Larry,
Plus the Brits,
I'm a buyer, for example, in Florida. I'm ready to buy an apartment in Florida or a house.
I got one to sell
and
you.
Brits are going to buy.
No, but the
Canadians
taxes,
are going to buy.
the real estate taxes
and
will kill you.
Libyan dictators are going to buy. Everybody's going to buy.
She's making a point you love. The taxes are stopping.
Yeah, the taxes are stopping you.
Taxes
2%,
and insurance.
2.25%.
Insurance is high.
It's way too expensive for me.
Insurance is a problem.
We're going to leave it there, guys. Thank you for that tour of the country. We really appreciate it.